From the floor of the CME Group, this is Danny Riley with today's midday update. And the name of today's video, S&P 500 Futures, Big Ups and Big Downs. I want to remind everyone that these are not our father's markets, nor are these his boards or charts. The high of the day in the S&P came in at 2164 half at about 10:30 Central Time. The low came in at 2150 half just after 9 o'clock Central Time, and last were 2164, 64 even, were up 15 handles on the day. Total volume, we've got 1.3 million minis traded, and we've got 650 big S&Ps traded in the pit. Total volume, we've got 1.3 million minis traded. Not bad for this time of the day, considering. Now look, next Monday is the first trading day of the new quarter, but it's going to be a busy, busy week. We have a total of 22 economic reports. We have a total of 11 T-bill or T-bond auctions or announcements, not that anybody cares, but eventually they may. And we have a total of 9 Federal Reserve Bank presidents speaking, and we have the Friday's jobs report number, the September jobs report on Friday. We have a lot of big numbers during the week. We have housing numbers, we have employment numbers, it's packed. Now, remember about a month ago or a month and a half ago when we did that view of over the last 30 trading days, where we had an average gain over that period of about 7 handles, and the average down day was about 5? Well, that's changed considerably. And what we want to try to do, what we're going to do is and next week's opening print, we're going to do the last 30 trading days and do a comparison of how things have changed over the last, what are we talking about, 60 trading days, or 3 months. Now, look, I think what's going on here is the markets are in motion. It's really been one thing or after another. You got Brexit, you got OPEC, you got Deutsche Bank, you got all this kind of outside macro global news hitting. You have the the September Fed meeting. You have the SEP-Quad Witch. Now we're into the final trading day of September in the third quarter and the quarterly rebalance. And right now, as we're speaking, the futures are right on the highs of the day. Now, what I've noticed is what's been going on is we go from very quiet up moves to thrashing down moves. And I think that that's a whole different picture than what we've been seeing over the last several months. I mean, we have had some down moves like after the Brexit thing, but more or less we've had pretty much all up moves until that most recent letdown. Now, according to the Investors Intelligence, the bulls are strong. We've got the sentiment is 45.2% bullish versus 23.10 bearish. Very, very, very high bullish sentiment. Now, what I think is going on here is that the markets have already sold off and they didn't follow through on the downside. And we've made several higher lows here over the last several days. And I get the feeling as we go into the end of the quarter today, I'm kind of looking for some walkaway trade, but I'll tell you what, it's not showing up at all. And then on Monday, we've got which is, I want to remind everybody, the Jewish holiday, Rosh Hashanah, and what it's that old saying is that you're supposed to sell Rosh Hashanah by Yom Kippur. Well, the first trading day of the first quarter, or the fourth quarter, I'm screwing this up, has the Dow down 6 out of the last 10. And what I'm kind of thinking is, I don't know about that. I just don't know about that. I'm getting this feeling that the markets want to surge. And I think maybe what we do is we're going to go out firm today. We've had this kind of up and down price action during the week, but we're going to go out firm today. And I think that there's a good possibility that going into next week, or at least the first 2 or 3 days of the new quarter, we're going to go back up. I know the stats say that Monday's weak, the first trading day of the fourth quarter, but I get a whole different feeling about this. And I want to further this a little bit. Look, I know there's a lot of problems out there. I know that there's a lot of reasons to sell. I know that the markets more than likely should go down. But at the end of the day, traders, I think it's really, really important to keep your focus on the fact that there's an abundance of free money around the world right now. And if Deutsche Bank goes bad, what do you think the ECB is going to do? What do you think Germany's going to do? They're going to come in and they're going to support the bank. Now, we know that the big headlines yesterday were that a lot of these big investment firms and hedge funds are leaving Deutsche Bank, very similar to what happened at Lehman Brothers. But I don't see the comparisons here. We're not in a credit crisis. Lehman Brothers and Deutsche Bank are not in any way, shape, or form in the same category as what was going on during the credit crisis. That said, it could have a major impact on the markets, but I'm going to remind everybody that the S&P has a tendency to take bad news and make good of it. And I imagine at some point that Deutsche Bank will be made into the good news that the S&P always makes out when things go bad. So I'm going to leave it like that, traders. Like I said, we've got a busy week next week. We've got the quarterly rebalance today. We'll see what's going to go on. It looks like they're buying stock and selling interest rates, but the interest rates aren't doing very much. So we're going to leave it like that, and we'll see you next week on the closing print.